Hello, hello, hello. This is Quant Street, a financial analysis and market action commentary channel on YouTube where we strive to filter signals from the noise. Let's see what story the market was telling us on the last Friday. So, looking at this top left chart, we see so here we are comparing SPY, VIX, NASDAQ, the small cap index, and the DXY or the dollar index. I think VIX is beating everyone else at a rise of about 10%. And there's a lot of volatility going on in the market right now, given all the chaos and turmoil caused by the stories behind uh, Wall Street bets on GameStop and AMC and others of the similar kind. And that could be a trigger for uh, further selling and increased volatility and leading to signals that trigger further selling in the stocks and seems to be that the money is flowing into the bonds. If we look at on the top right, we have SPY, TLT, HYG, and XLU. Uh, so here we're comparing SPY relative to the relatively stable asset classes. TLT has gone higher by 1/4%. High yield has gone or remained relatively flat, and XLU seems supposedly a more stable. Index of utilities is down by 0.75%. So, due to increased volatility, it seems the bond funds are gaining ground here. Let's look at some of the other indexes. So here we have SPY being compared with gold, US oil, and energy. And it seems everything is down, not as much as SPY, except XLE. The energy index down at -2%. More than that, gold is also down, which is not a great signal. Uh, US oil is down as well, um, indicating a bigger supply and therefore less demand and less optimism about the economy. On the bottom right, we have SPY being compared with the industry sectors like financials, retail, and healthcare. Uh, Financial seems to be tracking the SPY index. Retail uh, jumping around a bit, going high and then much lower, and then finally stabilizing at negative 1.74%. And the healthcare are relatively more stable at -1% compared to SPY. Let's look at the landscape for the market in terms of the overall market place. We have everything over here. We can see it's down and red, except the medical device diagnostics, which are expected to gain given the government stimulus to uh, uh, vaccinate millions of Americans in the coming months. Some of the other green that I see over here is GUK, Duke Energy and Utilities. Utilities again are relatively stable category or sector. Pfizer is also up. J&J is considerably down despite the fact that they came up with the data for their latest vaccine, but that was not very encouraging compared to the Pfizer and Moderna rates of efficacies. So, That's the story there. Financials, again, a bloodbath there going on. And so does, we can see, for example, in Tesla, the high tech stocks of Tesla, Apple, Microsoft, everything is red. Let's take a look at the indexes, and obviously the short indexes are up. All the short indexes, uh, the retail, the technology is down. It's obvious though the healthcare is relatively stable. The retail is up 6%. Uh, as per this chart, I believe the other chart that I showed you was more real time. The volatility is also up, as we discussed already. The fixed income is flat uh, or black. Silver is up, and gold indexes are down. So are the gold miners. That's, I think, it for this part. Let's look at the economic data in the last few days. So on Friday, we had the pending home sales, which went down by minus 3.3%, which is not, again, very encouraging for the economic rebound. And Thursday, we saw that the new home sales were also down uh, against the expectation. The initial jobless claims relatively better, but still uh, high for the current state of the economy. GDP expectation to be at 4%. And finally, we'll take a look at this report from Ethiopia, a weekly report about how the hedge funds are positioned through futures, starting with the 10-year note. This week, the hedge fund seems to have gone long, and there's a trend that can be seen of going long with the volatility rising. I think that's a very natural trend for across the hedge funds. Next is the 30-year bond futures. Uh, 30-year bonds have been short for a long time, uh, and the shorts have been decreasing. Taking a look at crude, the hedge funds are long, although not as much, and they seem to be trending down. They have been flat over last couple of weeks. Uh, this is on again the S&P, and this time for last few weeks they have been short overall, given the volatility and the peak at which the market has been, the kind of valuations that we've been seeing. Euro futures are up and trending flat over a period of time. This is gold. The gold again is up but trending down. The longs are trending down, and Nasdaq is still the hedge funds are going long on Nasdaq, and they increase their long bets on Nasdaq. We see a reversal for Russell 2000, the small cap index, and for a long time the hedge funds have been long, and this week they have gone short. And this is the US dollar again. They are short US dollar, and the VIX surged, although the net they are net short on VIX futures. The VIX has gone up. Expectation is that it will go down. And with that, I'll wrap up this commentary session on markets. Thank you for tuning in and appreciate your time and looking forward to sharing more insights and analysis in the upcoming videos. Quant Street signing off. Thanks again.